Riad Younes, one stock you like over at R Squared is the Bank of Ireland. Stock is up 34% year to date, 130% over the past year. So why do you want to stick with it?
I want to stick with it because the stock is still very cheap. It was down almost 90% at the peak of the crisis. Today we see the banks is gaining market share in deposits from 27 to almost 35 to 40%. We see the economy bottoming and growing over there. And we expect, because of this high market share, for the bank to have a very high ROE, about 20%. And therefore, we think the price to tangible book will easily improve from 1.4 to 2 times tangible. So you could see 60% outperformance over the next 2 to 3 years.
That's the Irish economy. Let's talk about the Mexican economy. Mexican stocks are down year to date, but Cemex, the concrete supplier, is up. So what does that say about Cemex? What does it say about the Mexican economy?
This has a lot to do with Cemex itself. Again, it's very similar to Bank of Ireland. It had a near-death experience during the peak of the bubble. They made a huge acquisition of Rinker right just before the bubble burst in housing. They have a huge exposure to the Sun Belt in the U.S., which is down 60 to 80% from the peak, and now we're starting to see, a turnaround over there. We expect the company to hugely deleverage over the next 2 to 3 years. We expect EBITDA margin to grow and EBITDA to grow significantly. If you look at the management target and you put a low end of 8 times EV/EBITDA, we get easily a 60% upside potential over the next 2 years.
And then finally, you're a fan of Vodaphone. When it comes to Vodaphone, people are talking about who's going to buy Vodaphone and what Vodaphone is going to buy. Put all that aside, how's the underlying business at Vodaphone?
It's a good question. So the M&A is icing on the cake, is not the only driver for Vodaphone. Vodafone is a company that is focusing today on investment and improving the network quality in Europe. Secondly, the key factor for the re-rating for the telecom sector in Europe is the regulator is getting much more friendlier because they realize companies are not making money and therefore they're not investing. And for an economy to grow in the 21st century, you need the state-of-the-art of internet infrastructure, which is lacking today in Europe because the EBITDA, because the ARPU for a typical European company is almost half their American counterpart. And now the regulators are doing all what they can to change that.
All right. Thanks a lot, Riad.
Thank you.
And thank you for watching The Street.